weekend all. Ira Epstein with your weekend edition of the Financial Market Wrap-Up, and this is for Friday, December 6th, 2019. Now remember, on the weekend edition, we cover one monthly chart, and then everything else is going to be weekly. Want to remind you, I've had my Cyber Week sale going, and it ends this coming week. So it's going to go into a few days of this week, then it ends, and it teaches you the charting technique that I have, and of course a big discount on my research. This is the first time I've done this in this matter. We were overwhelmed yesterday with the amount of response. I could not put out the updates. We had too much work at it. I got frustrated. We had to put so many different things in. But let's talk about what's going on. I just completed maybe now an hour and a half ago an interview with the Dow Jones Wall Street Journal. And the question was on the gold market and basically assets that are protection assets. What do people think? And I said that what took the air out of the market today was obviously the jobs data. Whoa, you added, 266,000 jobs. Mark was looking for 185,000. Some people were down to 120s. I didn't see any estimates at 266. You upped the amount from October by another 30,000. And then consumer confidence comes out and it's over the top. So we have just gone through an impeachment, 3 weeks or so of impeachment inquiry. Yesterday, to me, was the end of an event. That's what I said. I said when Ms. Pelosi came out and she is instructing the chairman to pair up the impeachment articles, to me, I don't care how much more nastiness they find on the president. As far as it goes with the House, they've determined what they're going to do, and the market is looking beyond it. That's what I thought. Looking at today's confidence numbers, now I'm even more convinced that that is the case. Then the question is, what about the big phase one part of a trade deal? And I came to the conclusion, right or wrong, and I'm probably wrong, but this is what I think. If I'm the president, and I'm not, why am I going to, just before Christmas, kick the stock market and say, no, we're not doing a deal, I'm slapping on the 15% tariffs? I don't think I'm doing that. I think that I've just won a 3.5% unemployment, the low of the year. I think that everybody that wants to work is getting a job, basically. And why should I pull the plug right now? I can do that in January. I can give an extension. As I said, I'm probably wrong. As for the energy markets today, come on. Do you think you're going to, on December 11th, have an IPO come out and the Saudis are going to come out of this OPEC deal and say, no, everything's falling apart, we're going to flood the market with oil? If you do, terrific. I wrote in my reports the opposite. I expected just what happened. Obviously, you're kicking and making the markets look good, so premiums coming out of the bonds right now and the stock market up, and even the Russell made a yearly high today. Not an all-time high, but a yearly high. So let's go to the charts and see where they're at. For the week, we didn't go, for the month so far, I said that wrong. For the month so far, we haven't gone anywhere. We're finishing the first week of the month, and we're up 2.35 points in the S&P. It feels like a lot more. I think you'd agree with that. But that's all that you're up so far. For the week, and this is the weekly chart, and there's the difference. This is monthly, this is weekly. They're both up the same because we're at the beginning of the month, right? So, an all-time high close. Nothing bearish there. When you look at the chart action, we had so far a good reaction week, and that's why it feels tiring. The market got down as low as 30.69.5, and the market finished at 30.46.5. Anybody's going to be a little bit worn on that. It's also, if we look at last week's high in the market at 31.55, we took that out today, so we have an outside week up. What would I not want to see? I don't want to see this week's low taken out this coming week or the week after. That could set up what I call a bull trap in the market. I'll go into that. I talk about this in my charting course, so you learn these ideas. First, you've got a pattern on the swing line. It's a chart without the swing line. The swing line looks at the previous bar, and the way that I've set it up, there's 5 rules. You learn to do these by hand in my charting course. But you're looking to see, you've got a higher high, lower low week, do you have an inside week, do you have an outside week up or an outside week down? Then the line forms. From the lines you're looking, and you throw the name off the chart. Is this chart bullish or bearish? Well, higher lows, higher highs is one of the requisites to be bullish. Where's the market in relation to key moving averages? Because you want to filter the swing line. The market is over the 18-week average. When you're over it, the bias is up. So I have two of those elements bullish. The market, if you'll notice, has fought numerous times against that number. Where's the Bollinger Band? We had been riding the band. It is common that the market does not close over that band. Only 5% of the time does it. So you had a pull away from it. Okay, nothing wrong with that. Still haven't entered anything bearish. And when you look at momentum, it hasn't turned down. It's just staying right where it's at. And remember, on the weekly charts, I don't look for overbought, oversold. Momentum is either up, down, or neutral. This is still bullish momentum. When I come to the NASDAQ, we've had the pattern of higher lows. Once we got over the 18-week average, we got the upside bias. We got one or two times over that band, pulled back, and that's what you normally do. Had this one break, and away you're going again. Next resistance, the upper Bollinger Band. But you're knocking on the door of what? All-time highs. What about the Dow? Same thing. And what else do we get? Santa Claus rally. What's going to upset it? I'm wrong on my Santa Claus theory, I think, if the tariffs were put on. I would imagine the market gets disappointed. But I don't think that's going to happen. That doesn't mean I'm saying it won't happen. I'm giving you a thought process. So you get your pullback. The market's well supported. Momentum up, trend up, bias up. Next resistance point, upper Bollinger Band. Russell, new highs for the year. This has been, not was. This has been the laggard of the market. It has just been stuck basically all year long, the whole year, in sideways action. You came out in the beginning of the year, got up, and if you look at this action behind me, it's really been very much sideways. The people that have tried the Russell to play for the big moves, they didn't catch it like the S&P, the NASDAQ, or the Dow. But it's come alive. It is a new high for the year today. So let's applaud it. I don't want to see this taken out, today's low, or actually because it's a weekly chart, this week's low, and the market still looks bullish. What about the VIX? The VIX had a bounce, but momentum is still locked in bearish. You're still bearish in lower highs, lower lows. You're running the lower Bollinger Band, and you're feeling the pressure. And on the daily charts, I know I said this week, I think the pros went back to writing calls once we got through Tuesday. It was very important to get through that. What about the notes? Okay, look at the 18-week average. That's your resistance. We determined bias from it. Bias is down. That changes if you take out this week's high, because it's an outside week down. Then you might get a run back up here, and that would probably coincide if those tariffs came on. I don't see that, but that doesn't mean it can't happen. I'm not blind. If the market doesn't get it, maybe we're going back to this 128 level. I certainly have the pattern beginning here of lower highs. Now I've got lower lows. It stalled a little bit right through here. I didn't know what I was going to get because the market had a rally early on, and then it collapsed. And you have a double top at 130.02, same numbers. So still bearish there. TLT. All you did is go back to the 18-week average. The bias has been down. You can see that. It's run back there. You've had the pattern of lower highs, lower lows. This was the bounce on the longer term, and now the market is reverting back. So until this week's high is taken out, and again, just like the other indices, it's just an ETF of them if you think about it in terms of the interest rates, still bearish. Momentum still down. Dollar index stuck. The dollar index is a wild card here. Is a trade deal bullish or bearish for the dollar? You might think it's bullish, but I'm saying, well, you know, it certainly helps Asia. It certainly helps Europe. Maybe this is where the leadership roles change a little bit. Not that the dollar starts falling apart, but maybe it weakens relative. I don't know. But I can see in the chart doesn't know either. You've got a higher high, lower low pattern. Eurocurrency, you are stuck right now at this 18-week average. Miss Lagarde, the chair now of the president, actually, of the European Central Bank, came out this week and said, in her opinion, barring some big calamity, and that calamity could be the trade war gets even worse between the U.S. and China, barring that, they may be done using monetary policy to get this going. Maybe it's time for the countries to spend. We heard that from her on her first speech, and I'm wondering if that isn't the case. In the peso, well, This market's got a pattern of higher lows, higher highs. The settlement today was 51.76, certainly well over that 51.15 area. So what we're hoping, and I think that's what the market is telling you, maybe if they can get through with this impeachment, the Congress can get something done on the USMCA deal. The Canadian dollar got hit today, but you also heard today that the Bank of Canada president is going to retire. Now, we knew he was only in there a short period of time. He's done a fine job. The market was down today. For the week, it's still up 10 points, but down. The pattern on the chart, you have a low and a higher high. And the settlement at 75.39 is still, what? Trading just slightly under the 18-week. I don't think you got a trend going here. I think you have sideways action. Japanese yen. I was surprised the market was able to rally this week, but it did. And we have a big outside week up. The last rally high was 92.54.5. If that's taken out, maybe you're headed to the 18-week average. They're spending a lot of money in Japan, I think $100 billion, not in monetary policy per se, but to get the infrastructure and other things going. So they trying to juice up the economy. Take a look at where this market held, though. The first challenge of the 100-week, this is the very first challenge. You haven't been down here since back in March. Twice, and you held it. So we know where the support is. I'm going to say the trend is still down on the bigger picture until you take out 92.54.5. In Bitcoin, I'm watching today the winners, and they're saying how some people won their contest for trades of the year, and Bitcoin was one of them. I don't know. I think the trade of the year was going short, and it's back down. But I do realize it was about $4,000 earlier, and it's come back up about $3,000. I guess it depends what you think there, but I don't see a trend. I got a lower low and a higher high, flat momentum. Brent versus WTI crude. Well, the differential is crashed in. It's going from 726 to 519. I'm dying to see the IEA report that's going to come out where they make the prediction as to what they think the differential is going to be. Last time I read, they thought it was going to be in the $3 to $5 range, and they've been right more than they've been wrong. So let's see what that does. Then we look at Brent itself. Not surprised to get a rally out of it in front of the IPO of Saudi Aramco. Higher lows, higher highs, being very contained in here. We'll see if the market can clear the 65. My instincts are to have a hard time anything near that 68 range. But you make a deal between China, the U.S., it's not going to break on that news, I would think. I would think it would rally, and the trend is still up. We have 9 days to know that. WTI crude up to the upper Bollinger Band, ran into a brick wall, settled right by it. The trend is up. Momentum is on the slow stochastic, higher lows, higher highs. Nothing bearish on those markets at this point. Gasoline, the battleground is being made, but more important to me is how the slow stochastics are narrowing in very dramatically. From those type of moves, big action happens. It's like compressing something. You're squeezing in price, waiting for that breakout one way or the other. That's what I think is going on there. Same in the heating oil market. So we'll see where that goes. And I think the Saudis, by the way, are right in their analysis. The first half of the year, a bit sluggish in the demand for oil. But as you get ready for the summer driving season in Europe, America, so on, whoa, you're probably going to get demand again. These markets seem to be winding up for something there. So, as I said, I've got my Cyber Week sale. In the sale, you get my charting course, which is $179.95. You can go on the website and buy it right now. That's what I charge for it. I throw it in free if you buy any of my research packages for 1 year. And we don't take the 1 year and sell it as like we do month to month. We discount it. It's all explained if you go to www.iraepstein.com under the word research. I can't make it any easier. It's simple. One of the packages is my morning subscriber video. At 5:30 in the morning, I'm recording, getting the traders ready, very specific. Buy here, sell there. I'm going to be wrong. I'm going to be right. You know, I don't walk on water. Who does? but you're going to get my ideas from that. Each one of those are about 20 minutes long, and they're videos, so you can watch them, but they tie in because the course is made up of videos. It's 54 videos. I'm going to teach you swing lines. I'm going to teach you moving averages, slow stochastics, window envelopes, Bollinger Bands, all the different areas that I work with, and much more than you see here. In fact, you never see window envelopes here. They're as important as the other 4 elements as far as I'm concerned. How do you find out about it? Just go to the website, take a look. The sale ends this coming week. I'm not going to tell you the day. It's just going to end on you. So take advantage, or you can call my staff. You can leave messages for us. We won't be here over the weekend. We'll be here Monday, 866-973-2077. You have a great weekend. I'll see you all come Monday.